Which banks will fail next? Banks are not showing losses on the mark-to-market adjustments on commercial assets and securities they hold to maturity. What's surprising is that the consumer in the US is just fine with low-interest mortgages, while the average yield of securities is 2% on banks and issuers' books, which causes securities to be underwater. Who has the most risk in this environment? Number one, the issuers of reverse mortgages in a high-interest environment. As an example, RMF, reverse mortgage funding, went down early this year. Cherry Creek Mortgage became the subsidiary of Guild Mortgage, which happened in March 2023. Market is closely watching FAR, AAG, and other issuers that need to pay the borrower money in a high-rate environment. Number two, issuers of commercial mortgage paper. While SBA is writing off losses as a government, commercial lenders don't have the same luxury. The top 10 lenders, commercial multifamily mortgage originators in 2022, were JLL, which is 50% down, CBRE, 30% down, PNC Real Estate Bank, down 50% from the peak, and Goldman Sachs, who was the first large institution to mark-to-market commercial assets. More commercial banks that we stopped hearing about now back into spotlight. Since the Signature Bank and SVB Bank failure, Regional Financial Corporation 40% down, Huntington Bank 40% down, Comerica 40% down, Zions Bank also 40% down from the peak. Number three, New York-based banks. New York put a deep freeze on the mortgage market due to the state regulation. Top originators in 2020-2021 in New York were Santander, Goldman Sachs. Some of the New York mid-sized smaller banks are also in trouble. New Millennium Bank, Freedom, Regal, Sterling National, Unity Bank, First Constitution Bank, and Empire State Bank. There's no appetite for acquiring assets in New York. If FDIC will take over the New York-based lender, they'll have to hold them on their books and discount them at 20 to 50 basis points on asset sale. Number four, condition for the next bank to fail. Term funding program was established to give liquidity to troubled banks is coming to the end. While there's discussion of TARP 2 with dysfunctional governments, no speaker in the House, government shut down in November, and there's no help to help the banks. The Bank Term Funding Program, announced by Feds in March 2023, offered loans for up to 1 year in length to the bank savings union, saving association, credit unions, and others, pledging U.S. Treasuries, agency debt, MBSs. However, the program ends 03/2024. Currently, there's no impulsive decision by consumer to withdraw money, and consumer panic came down from Q1 of 2023. The problem, however, is not fixed. You still have a band-aid over the volcano. The worst-case scenario, there would be no extension to TARP due to the government shutdown and no additional budget programs for the banks, causing bank runs again due to the more bank failures from the list I presented in this video. Uncertainty on interest rates, uncertainty on government actions, geopolitical uncertainty, and possibly failed banks all will result in Feds being forced to lower the interest rates fast in 2024. If you enjoy this content, please comment below or just like the channel.